So the purpose of the JV is to try and track the costs that were involved in the project, so that at the end of the adventure, whoever is owing the other one some amount can pay to them. And this happens especially, that's why in most occasions you'll find one of the co-venturers is requested to prepare the books. Instead of the back and forth that we have done, these books would have been maintained by one person, either Paul or Peter. And then in that case, they would have presented the books to the other co-venturers for purposes of reconciliation. Any question? I want to stop sharing and go back to my notes. So that is scenario one. Let's have a scenario where one of the co-venturers is the one who is retaining the books. Of course, in this case, we don't expect to have a memorandum. What we are going to have is a JV. So when one of the co-venturers is appointed to manage the venture, the other co-venturers do not trace or transact. So we expect that the books will be maintained by only one co-venturer, but only supply the managing co-venturer with funds if they want. Then they wait for them to repay through the profits. So the appointed venturer carries out all the transactions and maintains the records. Kindly note, they keep a book called a joint venture account, and this is not a memorandum account. What you are preparing was a memorandum account. A memorandum account, I said, is just some short notes. It's a composite books for recording the transactions. It doesn't obey any double entry system. Then, of course, they'll be having the books of the other co-venturer, so that they'll share with them at the end of the trading period. So in this case, when cash is received from the co-venturer, we debit the cash or the bank, we credit the co-venturer's account. If some of them supply stock, we debit the JV, we credit the co-venturer's account. When the co-venturer in charge pays for expenses, we debit the joint venturer's account, we credit the bank account. So when he makes sales on behalf of the venturer, we debit bank or cash because our assets are increasing, and we credit the joint venture account. If he's entitled to a commission for his activity, we debit the joint venture account, we credit the commission income account with the commissions payable. And then the venture and its records are given as follows. To record his own share of profits, we debit the joint venture account, we credit the profit and loss. And then to record any other co-venturers' profit shares, we are going to debit the JV and credit the independent accounts. And then to pay off the other co-venturers, we are going now to reverse. So we are going to debit the co-venturers' account, then credit our bank and cash. Again, these books are supposed to give us the view of how the joint venture performed and whether it transacted at a profit or a loss. I have an illustration there. Look at illustration 2 in your portal. There's Salim, Kassim, and Karim. You see how it pans out? I'm waiting for you to read the question. I read the other one for you. I should be preparing where I'll do those entries. Are you done? I've just deleted the content. So we've been asked to start with the books of Salim, right? Are you starting with the books of Salim? We'll have the Covenchara. We have the Kassim, Covenchara Kassim. Then I have Covenchara Karim. So I've been told that the three, Salim, Kassim, and Karim, were partners in a JV, each contributing 5,000. Salim purchased goods of 13,000 and also supplied goods worth 1,000 from his own stock, right? I need to reflect that in his books. So I'm talking about the purchases. The amount is 13,000. And then we are told that there is that amount that he took from his stock. This also, let me just, to differentiate them, let me call this bank. The money is coming from the bank to buy the purchases. So this is for 1,000. We go on. Then we've been told Karim also supplied goods worth 1,500. 1,500. And incurred shillings 50 expenditure on behalf of the JV. Remember, in the books of Salim, I'm going to reflect everything. So I have Covenchara. What's the amount there? The amount that Karim gave, Covenchara Karim? Not even amount. He gave stock. 1,500. And then there was an expense that he incurred of 50. So Salim is the one who is maintaining all the books, right? So I have to reflect that. In the books of the co-venturer, because I now have Karim coming in handy, I'm going to indicate that. So I'm going to debit the books of Salim because he's the one who is retaining the books, and I'm going to debit Karim. But these people started with some amount. I remember they started with, let me see, let me confirm. Each contributing 5,000. So I'll have to bank the 5,000 that they contributed. Karim also contributed 5,000. We've been told down there that this amount came from the bank. Then we go to the second one, where Karim is now the co-venturer who is contributing stock 1,500. So I've debited the JV. I'm going to credit the co-venturer Karim. I'll just indicate here JV stock of 1,500. There is also an expense traced in the books of Salim. So JV expense of 50 shillings. You can see how we are tracking the entries in the co-venturers books. We go on with the question. Then we've been told Salim paid expenses of 250 in connection with the JV and realized 20,800 from the joint venture sales. Then Salim is entitled to a sales commission of 5%. So Salim is paying, I'll indicate in the books of Salim, assuming he's paying from his bank account. He's paying for the expenses. What amount is he paying? I have to keep on going back and forth. I don't appreciate the work I'm doing. It's like I'm all alone in this class. What amount is he contributing, Salim?
It is 250.
Then he's making a sales. At times I wonder whether I still have students in this class. Then he's making sales of 20,800. But from these sales, he gets some commission, isn't it? Commission is an expense. So we are going to debit the JV. What is 5% of 2,800?
5% of
20,800.
1040.
You are getting
1040.
1040.
Yes.
Let me remove this. Yet we are not yet out of the woods. Unsold goods amounting to 510 were taken. Kindly mute yourself. Were taken over by Kassim. Now Kassim is taking some stock. Those are drawings. Salim settled the amount of Kassim and Karim by bank draft. So I go back. So I have Covenchara Kassim taking some stock. So Covenchara Kassim, the stock amount is 510.
510.
510. So I'll go in the books of Kassim, is a Covenchara, and recognize that, isn't it? I'll just indicate here JV. We have stock drawings, or I say stock takeover. Drawings is for money of 510. We can track that. And that's all, isn't it? We don't have any other transaction, right? You can balance these books. 21,310. This is 16,840. I want you to do me this math. 21,310 minus 16,840. What do you get?
4470.
4470. 4470 is the shareable profit. So let me balance that. 21,310. So profit sharing. Are we given any ratios? We'll assume they are sharing in equal measures, isn't it?
Yes.
So the one for Salim, these are Salim books, will be reflecting in the P&L, isn't it? What is 1470 divided by 3?
It's 1490.
1490. Covenchara Karim. So each will be taking home 1490. I can balance the other books. So I have this debited, so this will be credited. So JV profit 1490. Give me the totals. This will be 6490. What's the balance in figure?
It is 5980.
5980.
Yes.
What will it be? It's a bank overdraft, isn't it?
Bank overdraft.
We've been told in the question, unsold goods amounting to 510 were taken over by Kassim. Salim settled the accounts of Kassim and Karim by bank draft. So he's sending the instructions to the bank to replenish the account. Of course, this is the common practice of most businesses. As long as they agree to the accounts, they'll allow you to go ahead and draw the account. It is a practice that is permitted in businesses. So we are balancing the Covenchara Karim's books. Covenchara Karim's book, his profit, JV profit, still 1490. Any other transaction that you left out? don't think there is any. This 8040. So he'll be paid this amount through his bank, through a bank overdraft. So 8040. Now, if we were to illustrate the commission income, we'll just credit that account, isn't it? Because we have a commission income here of 1040. The other account that we are supposed to prepare, assuming Nani is preparing all the books. Let me just present it here. Kindly mute yourself. I'm saying the other book that we are supposed to illustrate is the commission, because we are told to prepare the books of Salim. So the commission income, we have debited the JV, so we are going to credit the, let me delete this. We are going to credit the commission, 1040. Then the other one is the purchases. The purchases of 1,000, because this other amount was coming from the bank. This is the stock that was taken by, just right here, purchases. No, the book is the purchases. Purchases account. Just indicate here JV 1,000. The other book that we haven't written is the bank extract. Just copy paste. So this is a bank account. Give me all the summaries of the bank. I have the JV purchases. Of 13,000. The other bank is JV expenses. 250 for Salim. That is all. Then I go to the co-venturer. I have co-venturer Kassim. Bank is 5980. Kassim 5980. Then I have the co-venturer Karim. The bank paid an overdraft of 8040. Right? We come to the debit side, corroborate with the credit side. We start with the sales. JV sales. $2,800. Then I have co-venturer Kassim 5,000. John was given 5,000. The other transaction that is affecting the bank account, I think none. Now remember, these are quarterly books. So there is no need of closing this account. This should be an extract. International Accounting Standard 1 allows the companies to prepare financial statement at the end of the year. So we'll assume that the final books will be at the end of the year. These are just the JV extract for the quarter that is ending on that 1st March of 2016. Any question? There's some point you kept quiet. Any question?